Hello guys, welcome back to my channel once again. This is CN Honor on the screen and you are watching CN Great Counsels and Forex Trade. And it's a beautiful weekend. I decided to make yet another video for you in fulfillment of my promise, okay? In fulfillment of my promise to make videos on the hidden divergence, Keep in mind that we shall be taking trades if the opportunity comes while in the course of recording this video, okay? But I just want you to know that in this video, okay, in the video that I talked about hidden divergence last time, I promised that I will make videos, okay? I made earlier video on hidden divergence with stochastic oscillator, okay? And like I said, this does not always happen, but whenever the opportunity comes, okay, and you spot it, is always profitable, like almost zero loss, okay, whenever you spot a valid one. And today is another video on that, and we are considering the power of hidden divergence with relative strength index, okay, RSI, with RSI. And let's just go straight into the setting by clicking on the F icon. Just as you know, I don't trade without having fractals on my channel because it helps me to pick the swings of the market and to know where prices have been rejected, and then that informs my decision. So the fractal, this is the parameter, the style is just 2 pixels, okay? You click done, and that's for the main chart, okay? Then on indicator, we have one indicator window, and that's indicator window 1. Please stick to this setting. Now what do we have here? Relative strength index, okay? The period is 7. You apply it to close. The stars is 3 pixels and color is this blue, but you can use any color of your choice. Please, the levels does not matter. Don't mind this level here, okay? Please, I don't want you to mind this. The level does not really matter, okay? We are not using the levels, okay? Now you click done. Then we'll get back to the chart. So you remember that I said, and I want to repeat it now, that hidden divergence helps you or entails that the trend will continue at least for a while, even if it's not for a long time. Okay, when you spot there is a hidden divergence, the trend, for instance, boom, whose predominant direction is supposed to be bearish, okay? Whenever you spot a hidden divergence, okay, which I'm going to explain more now, whenever you spot it, what it means is that the market will trend at least for a while. It doesn't matter how many number of candlesticks, but at least the trend must move bearish for a while. It could be 5, it could be 6, it could be 10 candlestick, it could be 20, it could be 50, you understand? But the rationale is that the market will push down for a while, and for crash, what I just said is the opposite, okay? So, and once again, it doesn't always happen, okay? Now, since it doesn't always happen and you can wait for it for long, what do? All you need to do is to it's very simple, is to incorporate any of this strategy that you resonate fine with. Incorporate it into your trading, okay? Now you can have 2 indicator windows or so for your major strategy that I used to trade. Then you can always pull this down. If it is this stochastic that you're using, you can always pull it down like this, okay? If it is stochastic you're using, or RSI, okay, for the divergence, you can always pull it down this way, and then you trade with the other strategies that you have on your different indicator window. You can have a different indicator window for other strategies, okay? Now, but whenever you spot that the market is giving you a potential hidden divergence, either on boom or on crash, what do? You pull up this, okay? You pull up this to confirm it with your indicator, as I'm going to show you, and then you take your 4 to 5 candlesticks in addition to your main strategy, okay? But I tell you, if you spot a valid one, this is almost like zero loss, and you can have this maybe on boom 1000. Please, I advise you to trade with it on boom 1000 because of the way it spikes on 500 indices. But you can have this on a good day, you can have this like between 3 and 5 positions, as in signals on boom alone, and on crash the same thing. So if you incorporate this into your trading or strategy, that would be a leverage, and then you can be making your money both ways, okay? So enough of that. And once again, I want to reiterate that I don't sell signals, okay? I don't sell signals, but I do mentorship that is well packaged, expository, and it's simple, okay? My reason is this. Of course, I have other engagements, okay, that take a lot of my time on daily basis, okay? But this is my main reason. It's one of my main reasons. Anyway, there are reasons. I know there is money in selling signals, okay? I can make huge money from it, but then, like I said, I have other engagement. And very importantly, okay, the question is, for how long will you continue to buy signals? How long will you continue to buy signals? Don't you want to grow and then start trading on your own competently? Well, that's why my channel and my program has a vision, and the vision is to work on the mindset of the trader so that you come to the forex market with the right mindset. And then if you are willing to be mentored, of course, it is going to be my pleasure to do so, because I don't know how long I will continue to be giving you fishes without teaching you how to fish. So I prefer I teach you how to fish, and then you fish on your own instead of stripping you in the name of signal selling. But if I will have to go to that, that might be maybe very much later. But like I said, I have a vision of basically to bring up traders who can trade competently and make their cool money. If you feel like showing appreciation, which some have been doing, fine. If not, glory be to God. So let's dive into the strategy of today, guys. How do you trade with this strategy? The power of RSI. This is hidden divergence with RSI. This is almost like the most profitable. And how do you trade with it? Now, I said it doesn't always meet, but whenever it meets, it's always huge, okay? Now, I've mapped out some places. Let's check. Remember that I say that hidden divergence tells you that the market will at least move in its original direction, at least for a while, okay? Now, you remember that in a selling cycle, of course, my students know what is selling cycle, but bearish bull markets, when it's moving along its predominant direction, that is from the high point to the low point, is on a bearish move, is on a selling cycle. And what do you expect? You actually expect the market to be making series of what? Lower lows and lower highs, okay? You expect boom to be making series of lower lows and lower highs. And then if that is the case, you are also supposed to expect your indicator making series of lower lows and lower highs, okay? But what happens? Now let's go to where I mapped out. Now this is what I'm saying. Now this market started making a bearish move. After it spiked like this, started making a bearish move, and then it spiked. It made another one. It spiked. Now, what did I say? On a bearish move like this, this is selling cycle. You expect the market to be making series of lower lows and lower high. Now, this is low point. This is high point. This is low point. This is high point. Okay, now let me clear so that you have a better understanding. Now, this is let's say this is high point. I beg your pardon. This is the highest point that the market reached. Okay, now it descended. This is high point, this is low point. Okay, this is high point, this is low point. Okay, do you understand it now? Now this is remember, as it's moving, it's supposed to be making series of lower lows and lower highs. This is a high and this is a high. Okay, but this high is lower than this high. That is why we call it lower high. And now this is a low point of this spike and this is a low point, but because this low point is lower than this, we call this lower low. This is what the market is supposed to be making also on the indicator window. Do you get it now? That's what the market is supposed to make on the indicator window. Now let's look at the corresponding this thing. Now, instead of the market making the same move on the indicator, instead of the indicator making the same move, the indicator rather made what? Higher, move than this. This is supposed to be lower for it to correspond to this, but it rather made higher. This is hidden divergence, whereby your indicator is telling you the opposite of what price is actually telling you. Your indicator is telling you the opposite of what the candlesticks are telling you. So now, how do we identify or confirm it? Simple. You just put your arrow like this and then see, put a corresponding arrow. Have you seen it? Are they not opposite? This one made this lower high, but this one I say made what? Higher. Are they not opposite? So I said, once you spot this, when do you put your trade? You wait. Once you spot this, you wait for the fractal to be introduced. Normally the fractal is supposed to be introduced at the close of this first bearish candle. At the close of that candle, fractal will be introduced. So as soon as the fractal is introduced on the spark at the close of the first bearish candle, you execute your trade and then take your 4 to 5 candlesticks. You are out of the market, irrespective of how long the market will go. If you want to make this strategy a zero loss strategy, it's as simple as that. Now this is the zoom level you are using for it. Okay, zoom level 2. You zoom out completely like this, then you zoom in once. This is once. Okay, this is zoom level 2, and that's the zoom level you are using. Now let's check this. I told you I mopped out some places. Now, is this market actually making a kind of lower high here? Yes. This is the high point of this spike, and this is the low point. This is the high point of this one, this is the low point. But then this very high point is lower than this. That's why we call it lower high. And this low point is lower than this low point. That's why we call it lower low. Okay, that's it. Now look at the corresponding indicator position. Look at it. Look at it. What did it make? Higher than this, instead of this place becoming lower. So there's a divergence, and then you would have taken your trade somewhere here and then take your 4 to 5 candlesticks and you are out of the market. Okay, it's as simple as that. Okay, and if we go back, we see it. Okay, in a day you may have up to like 3 or 4 signals on boom alone. Now you can also trade this on a higher time frame. Let me just show you the one that happened recently. Just take a look at this. Can you spot something? Now on a higher time frame, you are looking at the major swings of the market, and that's where your fractal comes in to help you pick the swings of the market. The fractal picks the swings, though not always 100%, because there are some minor swings that it doesn't pick, but it picks swings and almost 100%. Now if you look at the spikes, the bullish candlestick, you see that fractals were introduced on them. It picks the swings, the swing lows, the swing highs, and things like that. Okay, now in a higher time frame like this, you consider the major swings of the market. Now how do you know the major swings of the market? Now you see all these ones, they are minor swings. Okay, there are minor swings of the market. So you want to connect the major swings of the market. If you want to connect the major swings of this is the major swing of the market. So at the break of this swing here now, you begin to reanalyze whether the market will continue on a bearish move or you want to continue in a different channel. Okay, now that's just that. So but that's not what we're talking about. What we're talking is how you can trade with it. Now if you look, this is a major swing from here, and then the market is descending and is making series of lower highs, okay. Now if you look from here and the corresponding indicator position, you discover that the market on the indicator made this. Why the candles make this? Is it not in an opposite direction? So you would have executed your trade somewhere here at the introduction of this, and then you would have taken your 3 to 4 candlesticks on 5 minutes time frame. That is about 20 good minutes before it started sparking like this. I don't know if you understand. Now let me place the arrow so that you understand the divergence. Let me place the arrow, okay? Now yeah, let's pick our arrow. Have you seen it? Okay, have you seen it? Then look at what the indicator made. Okay, have you seen it? Have you seen it? So guys, that's how we trade with it. Even now there is still divergence between this swing here, and this place. Okay, there's still divergence. Okay, but then we're not going to take the trade because it's not so obvious, so we're going to leave it. If we see another position or another signal, we'll take. But if we don't, I believe you've taken note on how you can trade this on higher time frame and on M1. Now let's check crash for a back test. If we see opportunity, we take trade, but if we don't, we'll call it a day. There is no opportunity. The market is actually making series of lower lows. It's on a very serious downtrend. Let's crash 1000 now, but I mapped out this place. Now for crash, the opposite is the case. Normally the predominant direction of crash is supposed to be bullish. That's why we call it buying cycles. Okay, now my students will know much about that. And what do you expect? You are supposed to expect the market to be making series of higher highs and higher lows, just as we can see here now, if it's on a bullish move. Now this is the market crashed here, then it started making bullish move, it spiked and made another bullish move, and then it spiked. Okay, what do you see? This is high point, this is low point, this is high point, and this is low point. But look at it, this high point is higher than this. That's how we call this higher high. And this low point, okay, is higher than this. That's why we call it higher low. Okay, I will call it higher low. This is what the market is supposed to be making, and one would have expected the indicator to make the same move. But what did the indicator do? This is it. The indicator rather pushed down at the corresponding spike of this and then made lower low, okay, in opposite direction. Now let me place the arrow so that you will understand better. This is the arrow for the price or the candlesticks. Now let's pick another arrow that will correspond. Look at it. Is it clear now? Do you understand it now? All right, I want to believe that is taken already in an opposite direction. Have you seen it? So you would have executed your trade somewhere here at the introduction of the fractals, and you have taken your 4 to 5 candlesticks and you're out of the market. So guys, that's how you trade with this strategy. And please, I've not seen any opportunity for us to place trade, and this is going to be the first time I'm making this kind of video without trading. Okay, but like I said, it doesn't always happen. But let's check. Yes, we don't force the trade. We trade when we see opportunity, and especially if it is high probability. Let's check crash 500. Oh, there's no opportunity. So guys, many thanks for watching this video, guys. I believe if I see an opportunity before uploading this very video, I will maybe include the trade that I'll take on it, and before I finish the final editing. So if you are new on this channel, I'd like you to hit that subscribe button down below, and then click on the notification bell so that whenever I upload a new video, you'll be the first to watch it. Okay, share this video with your friends and fellow traders, and don't forget to give it a thumbs up, leave your decent comment in the comment section below, and I'll talk to you in my next video. Many thanks for watching once again. This is CM Great Counsels signing out for today.